It's just hello to everybody who is currently listening into this webinar. We will just wait a few minutes to ensure that we get everybody else onto the webinar. So please just sit back and relax, and we'll be with you in a minute or two. Okay, everyone, we've still got some people dialing in, but I think that we will start because we're just a minute or two past 11 o'clock Perth time, which is where I'm based. I'm Belinda Honey, one of the executive directors for Mappian, who's based in the Perth office, though I do work right across Australia. And today we're here specifically to talk to all of you about some of the challenges around payroll and payroll compliance. We've got a really large attendance of people right across Australia today who are participating in this webinar from all different industries, small organisations through to very large organisations. So welcome to everyone, and hopefully our panellists can give some of their wisdom and insight to assist you in respect to some of these issues. So payroll compliance, it's two words that everyone's heard many times, no doubt, over the last couple of years. While it used to be something that was dealt with in the back rooms of the finance department or the HR team, it's now front and centre with boards and executives of many businesses now asking that question, are we compliant? And we have many conversations regularly about this compliance issue. As we all know, the attention on this issue really started with the underpayments of the George Columbaris restaurants down in Melbourne, where Jamie is. That really brought this issue to the front and centre. And I think it had been an issue that had been bubbling away for many years. And to be honest, the whole issue around payroll compliance and whether people are being paid together, it's not a new issue. It's been there forever. You know, 40, 50 years ago, there was still challenges around it as well. But it really came to the forefront then, and there was a lot more attention, and it really hit the news in a big way. So since then, we've seen employers from many, many different industries, everything from, you know, some of our largest employers in banking and hospitality, retail, public sector, technology, not-for-profit, many others as well, have had to publicly declare underpayments of wages over a number of years. Many of them have self-reported to the Fair Work Ombudsman. And these underpayments have occurred for a variety of reasons. They've been everything from the wrong interpretation of industrial instruments, annualized salaries not compliant with the requirements of awards, not recording time properly, not classifying employees properly. But most commonly, they've occurred because the payroll system is not paying employees what they should be paid due to incorrect rules in the system. From our experience, the rules may have been written, you know, years previously, and they haven't been checked, and that's where a lot of the problems have occurred. The unions love to refer to it as wages theft, but in our experience, it is often simple errors that have become bigger and bigger over the years and then resulted in the underpayments. But interestingly, and Shane and the others on the team will talk about this, where there are underpayments, there are often overpayments as well. And in our experience, there's definitely overpayments. At Mappian, we've helped clients big and small across every industry with many things in this space, from identifying and interpreting instruments and contracts to classification reviews through to detailed audits of payroll, assistance with back pay calculations, and what we've started calling our spot checks, where the Mapping team go into a client's payroll and check one pay run for a sample group of employees to see if we can identify any issues. Today's webinar is really to try and help you track your way through this area. It doesn't have to be an area that causes too much angst and too much concern if you know how to deal with it and you know where to get support and the things that you need to be focusing on. So my colleagues, our expert team of panelists, will give you advice on what to look out for, what to do, and how to deal with any issues that may arise. We'll start shortly by moving to our panelists, and I'll ask them some pertinent questions about this topic. While we're moving through the topic and the panelists will be answering specific questions, if you have any questions that you would like the panelists, please ensure that you include them. There's the ability to ask questions through this webinar, and we will be keeping an eye on those questions as they come through, and we will be trying to answer as many of them as we can. There may be some that we can't answer, or there may be too many, we can't answer them all today, but we will make sure that somebody from Mapping gets back in contact with you after the webinar to help you with any questions that you may have that we weren't able to answer today. And at different points in the webinar, we might even stop asking the panelists questions and we'll go straight to those questions that are being asked. So, most importantly, let's get on to our panelists for today, and I'll quickly introduce the three of them, and then we'll start our questions for the day. So first of all, we've got Ben Cooper. He's an associate director based in our Brisbane office, and he's got extensive experience across many industries in industrial relations and compliance. He understands the legislation and he understands the compliance issues extremely well, and he'll give you some tips to assist you with managing this sometimes complex area. Jamie Patterson is in our Melbourne office and he's an associate director down there. He's got extensive experience as a HR specialist and has worked in HR roles for many years before joining Mapping to lead our Melbourne business. So Jamie has a very practical and pragmatic approach to this topic, very much from a HR perspective, and will share some of his expertise and some cases we've assisted on. And lastly, but most importantly, probably for many of you, is Shane Moretti. Shane is our senior payroll consultant. He heads up our payroll analytics team. Our payroll team for Mapping actually sits in Perth, but we assist clients right across Australia. So, but the team is actually based in Perth. So Shane has worked for the business for many years running payrolls for clients. So we do outsource payrolls, but he also has been helping clients to check their payroll systems to ensure the employees are getting what they should be paid. Shane will bring that real payroll perspective to this discussion and also share some details of some of the work that he's been doing with clients in this area. So on that note, after the introduction of the panel, I will move on to starting with some questions for the panelists. And just a reminder to everyone, just send through your questions through the Q&A platform on the webinar, and we will work through them with you. Okay, so let's start with Ben. So Ben, let's start with you by giving us an overview of your experience in this space. What have you been doing with clients in this area?
Thanks, Belinda. Well, for those people that don't know me, I've been working with Mapping for 20 years, and within that time, I've seen pretty much every variation of underpayment or alleged underpayment that you think you could come across. It can be a range of issues from simply a one-off issue to something that's a systemic issue. We've seen and dealt with investigations by the Fair Work Ombudsman or underpayment claims which have been brought by individual employees. And we see that particular last piece as becoming more common. So I'm aware that there is at least one employee advocate who, if you bring an unfair dismissal claim to him, he will say, well, look, I'll run a free pay assessment for you. And so commonly we'll see multiple applications come through at the same time.
Okay, thanks, Ben. So what would be the first piece of advice that you would give to an employer to ensure they were compliant in this area?
The simple advice that I would give you first up is don't panic. Don't go making reactive decisions. Understand what is the problem that you're facing and then developing a strategic response to that. And there may be a number of different responses that are possible. As you mentioned earlier, more often than not, we see that there are overpayments that have been made at the same time that there are underpayments. So there can be some discussions with employees about rectifying that situation, but taking into account the overpayments as well.
Yeah, that's a really interesting one, because I know, you know, we had one client, for example, who before understanding the full extent of the problem that they had in respect to their underpayments, gave employees a commitment that it was likely that there would be overpayments, however, they wouldn't be asking for the money back. But then the level of overpayments actually ended up being quite significant. So I think that's really good advice, that people should definitely take that considered approach and understand the problem.
Yeah, and I guess just to add to that, Belinda, I've seen a situation quite recently where the employer had gone out and told employees very early that there were underpayments. We were still calculating what those were what those would be. And in many cases, when we looked at the data, they had overestimated the issue, or there wasn't an issue. But the problem was the employees already had an expectation that they'd been underpaid, and it's going to be a very long process to convince them that that's not the case. So there's a cultural aspect to this as well as a compliance issue.
Yeah, okay, thanks, Ben. So what are some of the common areas you've seen clients having issues with in this space?
Yeah, I think you touched on this at the beginning, but I think they fall broadly into two categories. One is an interpretation issue. So the proper application of the industrial instruments, the awards, the agreements that might apply. And the second one is more of a payroll compliance issue in terms of making sure that the system is set up correctly to start with. But that's not the end of it. Awards change, conditions change, and so payroll needs to be continually reviewed to make sure that it's updated. But I guess going back to the issue about awards and enterprise agreements, we've got an initial issue about what award applies. So many employers don't correctly apply the relevant award. They might think it's a particular award, but in fact, it turns out that it's another award. Or, for example, awards might change. So as part of the modern award review process, I've got a client who was in the vehicles award, and that's been pulled out now and put into manufacturing. So that brings a whole series of changes with that. And if the employer doesn't know that, then they're paying under the wrong award. Similarly, we see issues with employees who are paid by salary or under some sort of loaded rates arrangement. And I know this is something that we might get into a little bit further, but in some employers, there's still a misconception that if your employees are paid under a salary, that the award doesn't apply to them. And that's, as a matter of law, just not the case. You talked earlier about the George Columbaris situation. He had salaries in place for a lot of his chefs. It was under the correct award, but the loaded rate that he was paying was just simply not enough to cover the hours of work that they were doing.
Yeah, that's definitely been one of our most common ones we've been dealing with. So, yeah.
The other issue then is also, it's not just awards, but also enterprise agreements. So often, because it's the parties that come together to negotiate an enterprise agreement as opposed to interpreting an award, the parties can leave the negotiation table with different expectations as to what they've agreed. And it can be a long time before sometimes those misunderstandings or differences of opinion, I should say, are picked up. And so that can be a problem as well in the way that enterprise agreements can be interpreted.
Okay, all right, thanks, Ben. Jamie, we might move on to you now. So just give us a bit of a start by telling us some of your experience in this space and what you've been doing with clients in this area. Oh, Jamie, you're on mute.
Sorry, there's always one that does that, isn't there? So my experience, no, for those who online I haven't met, I joined Mapping about 18 months ago, and in that 18 months, I've been involved in the review and assessment of positions and classification and award coverage for 4 different clients. 3 of those have been large tier 1 clients, so big organisations, 2 of which had been engaged in an enforceable undertaking with the Fair Work Ombudsman. So the work that I did with those companies included reviewing all their positions against the various employment instruments, agreements and awards, and assessing the positions and the classifications. And also always involves a final report with findings and recommendations in 2 cases to the Fair Work Ombudsman. The fourth case was a smaller organisation that just built to about 45 people who were, like a lot of organisations, heard a lot about your underpayment of wages, your George Columbaris, etc., and came to us and said, look, we think we're okay, we might have a few issues, but we want to get it checked out. So we did a full review, full payroll audit with Shane there as well, and we then assisted that client as well with implementing the outcomes of those, communicating to the workforce, implementing it, talking to the union, etc. Okay.
So what would be the main messages you would give employers about, based on your experience in this area?
Mm-hmm. I think one of the main things is get it sorted, get on top of it and get it sorted. If you think there's a problem, then just get it checked out. A payroll audit is a reasonably simple thing to get done. So same with a review of classifications. It's a relatively simple process. So it's about getting on top of it and taking some actions and getting some advice, and identify if you have a problem. Once you understand what the problem is, then you can plan to fix it. You can put in place what steps you need to do in regards to fixing any underpayments, what you need to communicate to employees. And I think that one of the key messages is don't assume that there is no award that applies to these people that work in this function. Don't assume that the award you applied to certain people 2 years ago is still the same award. As Ben highlighted there, there's been a lot of changes to the awards over the last few years. So don't assume, get it looked at.
Yeah, okay, thanks, Jamie. So, what are some of the key considerations associated with this issue of award coverage and classifications?
Yes, I think a number of considerations, one of which is firstly, identify which award applies. And you need to keep on top of that. Like we just said, they change a bit. So is it an industry award? Is it an occupation award? Have a look at and consider which award applies, and don't assume either that they do cover your employees or your employees aren't covered by an award. Understand the position. Okay, understand the positions that you're looking at. So have a clear org chart and have clear, up-to-date, accurate position descriptions so that you can make an assessment and against those awards. And again, monitor the awards. This should not be one piece of advice. It's not a set and forget type activity. Keep on top of the awards and keep an eye on them. We've seen a number of changes as Ben has just talked about. For example, human resources was often considered to be not covered by an award, and we've seen it put in some awards like the Banking and Finance Industry Award as an example.
Okay, thanks, Jamie. Mm-hmm. All right, we'll give Jamie a rest for a minute and move on to Shane. So Shane, you've been helping clients a lot in this space. You run payrolls for some of our clients as well. So can you just start with give us a bit of an overview of your experience? What have you been doing with clients in this area?
We've been auditing payrolls for quite some years now for different clients, just to see that they're being paid according to their agreements or their awards. But it is only recently in the last couple of years that we've noticed a significant influx of this. As George Columbaris, we have to thank him for that. But we're seeing a lot of different industries. We've had hospitality and restaurant industry, but there's also mining, hydrocarbons, cleaning. There's a lot of industries that are actually contacting us, a lot of companies from various industries that are contacting us to just do spot checks of their payroll, just to ensure they are compliant. A lot of people come to us and say, we're confident that we're compliant, we're 100% confident. However, we just want to have something in writing to prove that we are. And when we do these audits, 99 times out of 100, we will find something wrong. So whether they've either been overpaying or underpaying, so we'll just let them know so they can fix it before it becomes a huge problem.
Yeah, that's been a really interesting one that we've seen, that most, just for everybody who's listening in, most of the payrolls we've checked, Shane and his team have checked, there has been at least one issue. And sometimes it'll only be a little issue, but, you know, even things like superannuation and whether it's being paid correctly on ordinary time earnings and things like that. So, yeah, it's been interesting over the last year or two. So what are some of the most common mistakes that you're seeing, Shane?
A lot of the mistakes relate to ordinary time payments and superannuation calculated on these, annual leave accruals. A lot of clients are over accruing their annual leave and overpaying their annual leave. And payment of penalty payments. And also we have another side of it where employees are paid, what we noted before, employees are paid a salary, but they're covered under an award. So when they're actually working shifts or something like that, we have to make sure that they are actually compensated for this in their salary. So that's another part of the audit that we just make sure that employees are compensated. So when we look at audits, it's mainly for agreement and award-based employees. However, it is also good to get your salaried employees checked as well, because there are things that apply to salaried employees that people miss as well. Yeah. And that's mainly superannuation and annual leave.
Yeah. So. Okay. All right. Thanks, Shane. Ben, we might move back to you, but just as we're moving back to you now, we have just been asked one question from one of the people listening in, Linda, looking to employ a receptionist to cover for parental leave for 12 months. As this is a fixed term contract, does this fall under the same rates as permanent employees in the Clerks Award? I just thought I'd pass that one to you quickly to see if you've got any way of answering that, or you might need to talk to Linda later.
No, look, I can answer that. The short answer is yes. The employee, irrespective of whether it's fixed term or because it's a maternity leave replacement, the rate of pay and the classification under the award will be exactly the same, as will all of the other conditions under the award.
Yeah, okay. And actually, Ben, the next question that comes up is a really interesting one, and we get asked that a lot, and it was one of the things we were going to talk about with you later. So John has asked, looking at the various wage awards put out by Fair Work, the complexity in many cases are nothing short of ridiculous. Are there any moves to address this with simplification?
Yes. We have to look at this in the context that pre the current modern awards, we had about 4,500 awards operating in Australia. That's been reduced down to about 120. The Commission was required to undertake a process of award review or award modernisation, which it did in 2014. That review was supposed to take 2 years. It's taken between 4 and 6 years to do that review. As part of it, the Commission undertook an award simplification process, and what it classed as an ability to make awards in a more plain English fashion so that they were more readily understood by lay people, particularly employees on the floor or in the workplace, and by the employers. In my view, I think they haven't succeeded in that. Awards are still incredibly complex. The application of which award applies, the demarcations between awards has not been simplified. So in regards to John's question, that is an ongoing process, but it is by no means simplified at this point in time.
No, I definitely agree with you there. And John, that was a really good question. It is something that's definitely regularly discussed. And I know that, there's a lot of lobbying with government and the Fair Work Commission in this space. But unfortunately, we're not seeing it to a level that makes life easier for employers. Hopefully that will happen, and we'll continue to see that lobbying occurring. When we've got situations like we had one of the matters that Jamie and myself have been involved in, where we had 4 different lawyers giving 4 different interpretations to a clause in an award, you've got a problem. So yeah, it is definitely well recognised, and will it be fixed up? Only time will tell. And I think, following on from Ben, it'll be a while before it's fixed up as well. It won't be a short-term fix. Okay, so Ben, some of our clients have struggled. This actually feeds really well into John's question, because some of our clients have struggled with the interpretation of clauses in enterprise agreements or awards. What advice would you give them to help them out in this area?
I think the best advice I can give is to consider the position you're in and take advice. Come and talk to people like Mappian or whoever is the provider, and look to get plain, simple advice around the application of the agreement. One of the benefits that an organisation like ours has is that we work across a range of industries, but we also work across a range of employers within an industry. So more often than not, somebody's come across this issue before, and we're able to give guidance in that direction. But okay, the simplified advice is, don't necessarily work on your own, and this is not meant to be a criticism at all, but look for a second opinion. Don't necessarily make certain assumptions about how something's going to be applied.
Yeah, okay, thank you. So can someone just bring up the Fair Work Ombudsman and they'll tell you how to interpret a clause?
Look, you can ring the Ombudsman, but the Ombudsman's default position is that they don't give advice. The advice that they will give you is that you need to comply with the award, which for the most part is completely unhelpful. So they're not going to give you advice about how a clause should be interpreted or what the consequences necessarily are in terms of, have I underpaid a person, if you're just going through the general telephone line process.
Yeah, I was just laughing while you were saying that, because John put in a comment saying even Fair Work apply a caveat on their award documents stating the contained information is general only. What the...
Well, we've got a situation at the moment with a client where we're trying, the client has self-reported to the Fair Work Ombudsman. We have a particular interpretation about how the clauses should be applied. We've sought advice from the Ombudsman as to what their interpretation is, and we still can't get a clear answer. So it's very difficult for us to be able to say to the Ombudsman whether we've underpaid or the extent of the underpayment if we don't necessarily understand what their view is. ultimately, the Ombudsman takes the view that only the court can decide how a clause should be interpreted and have legal meaning. So you'll generally find that they won't be very helpful in that regard, unless there's already some clear case law on a particular point.
Okay, thanks, Ben. So if an employer believes that they probably have a problem with their payroll that's potentially resulted in underpayment, should they notify the Fair Work Ombudsman?
Well, I guess the starting point is that under the Fair Work Act, there's no obligation on an employer to self-report. There may be other reasons why a client chooses to self-report. So an example might be if a client is a publicly listed entity, then they would have to disclose to their shareholders where there was going to be some potential underpayment of significant cost to the business, and therefore it's part of the warning process that the company needs to disclose both to its shareholders and to ASIC. In those circumstances, it's a high likelihood that it's going to become public, and you may wish to consider self-reporting. In other cases, you have businesses or we have clients that are in receipt of government funding, and there might be an obligation to disclose how they're using that funding, including making some type of reporting declaration. I think the real takeaway, though, is in years gone by, clients would self-report because there was a view that the Ombudsman would be more lenient towards them if they did that. Now, since or over the last 2 or 3 years, the Ombudsman's made it very plain that that situation no longer exists. If they believe that you've breached the award or the act, then there is a reasonable likelihood that they would prosecute, irrespective of whether you've self-declared or they've found the underpayment themselves. So I would caution people and clients about self-reporting because of some of those issues, because it may be that the matter can be resolved by working directly with your employees, and there's an easier solution to it. The other thing, though, is that if clients are going to self-report, the process that the Ombudsman applies can be fairly time intensive. So they will want to know how much you've underpaid, what you've done to rectify the underpayment, and what measures you've put in place to deal with that. And so if you are going to self-report, it's best to get advice first. As I said before, don't panic, have a plan, take advice, and then we can gather the information together and present it to the Ombudsman in the way that is going to be most acceptable to them.
Right. Thanks for that. And Ben, just one question from Linda before I go on to Jamie for a few questions. Linda has asked, what's the difference between a salary and an award employee?
Linda, I guess everyone, there really isn't a difference in terms of if somebody is a salary or award employee. The awards apply as a matter of law to the employees that they cover, irrespective of how they're paid. So an employee could be classified under an award and they reach an agreement with their employer that they be paid a salary, and that's fine, provided that the salary is sufficient to still cover the award terms. I guess the issue is that we have a common misunderstanding that if you're covered by a salary, then you're not covered by an award, and that just isn't always the case. In fact, it's more often than not the case.
Yeah, and that's where we've seen a lot of problems, definitely.
Correct.
Okay, thanks, Ben. Jamie, so we've talked a little bit about, this process that some companies have been going through in this area. So when should you engage with your employees on these issues?
Yeah, good question. It's my advice about any communication with your employees, and it may or may not include the union as well, depending on your workforce, is be proactive, but definitely don't go too early. What I mean by that is understand the problem, take the steps review your positions, review your award, review your payroll, and see if there actually is an issue there. And Belinda, you talked earlier about that example of the statement made by the employer was, we're not going to pull back money that's been overpaid, but we are going to rectify underpayments. And because they made that statement early, before understanding the problem, which was they had both underpayments and overpayments, then they weren't able to pull that money back. So, you know, you've got to understand what the problem is and then build the messaging and your communication plan from there, and then deliver that to your information, deliver considered, accurate communication to your employee, but understand the problem first.
Yeah, okay, thank you. Now, this sort of follows on a little bit from Linda's question about a salary and an award employee. You've done a lot of work with some of these big, complex Fair Work Ombudsman issues around which instrument applies to the employees, if any, and then how the employees are classified within those instruments. So what's some of the best practice around this area?
Yeah, okay. So I think it's understanding the award, understanding which award applies to your organisation, understanding whether it's, again, if it's an industry award or an occupation award, and then it's really understanding that position, and which comes back to that clear, accurate position description, and then you make an assessment against that award and against the classifications, and you pick one of those classifications. My advice is always apply some sort of methodology, some sort of science behind why you make the decision that you make in regards to the employment instrument and the classifications. My other piece of advice is be conservative, always err on the side of caution. And what I mean by that is, if you're assessing someone under an award and you think they're a level 3, but the position description reads probably 50% into a level 4, go with a level 4, because that will give you a little bit more protection, and having that conservative approach, having that methodology and that science behind you know, how you classify your people and how you pay them will give you a good foundation if you ever put on a stand anywhere and asked to defend that position.
Yeah, no, that's good advice. Thanks, Jamie. All right, Shane. Now, we have actually had a question come through. Amy has asked a question saying, on Facebook, Fair Work have said that overtime must be fully paid and not rounded to suit a payroll system. What is the best way to calculate overtime in regards to minutes of overtime worked? We try to pay in 15 minutes increments. Should we be paying by the minute? Have you had to help any clients with that particular issue?
Yeah, we do. Some of the payroll clients that we actually have, we pay their overtime by the minute, and it may seem like pedantic, like to pay by the minute. However, when you're talking a few minutes here and a few minutes there, it's not a lot of money, whereas people will expect to be paid for what they work. Obviously, with the timekeeper system, when people clock in the morning, you wouldn't, if they clock in 10 minutes early, you pay them from their start time. However, when they clock off in the afternoon, if they've worked 17 minutes overtime, you would pay them 17 minutes because they've worked that overtime. You could have an argument that, oh, they lined up for 2 minutes to punch out. However, the best practice is to pay in your minute increments.
Okay. And we've had a few clients, I think, who roll it up into 5-minute blocks. I suppose 15 minutes, it's really going to depend on the industry and the frequency and things like that, whether you were doing it in 15-minute blocks, wouldn't it?
Yeah, and it's like, it could work out. It's like, and where do you draw the line? If you work 7.5 minutes, do you round up or do you round down? And so with swings and roundabouts, it probably works better to actually pay by the minute. Then you won't have anyone coming and saying, hang on, you've been overpaid or underpaid. However, it's how your timekeeper system is set up. obviously, if your timekeeper system is only set up in 15-minute increments, it makes it hard to pay what they've actually worked because it won't keep track of it. So when we do an audit, we can only audit based on the times that are in the timekeeper system. We can't say you're underpaying someone because they worked an extra 5 minutes, because the timekeeper system won't show that. So you have to make sure that your timekeeper system is calibrated correctly. And the best practice would be to pay in your what they work.
Okay.
So if they work 2 minutes overtime, well, 17 minutes overtime, pay 17. If they work 14 minutes overtime, pay 14.
Okay. All right. Well, Amy, it's a complex area, but hopefully Shane's managed to help you with that. And feel free to reach out to Shane if you want to discuss that any more after this.
Belinda, could I just jump in there for a second? Sorry, it's Ben Cooper. Most awards say all time worked outside of the span of hours or outside the employee's roster is overtime. So from a technical perspective, it comes down to minutes, not blocks. So that's where the Ombudsman is coming from when they're applying that perspective.
Great. Thanks, Ben. Okay, so Shane, what advice would you give an employer so they can ensure they're complying with an award or agreement in their payroll system?
Just to do a spot check, really. And it's like, read through your award that's covered, covers your employees or your industrial agreement, and actually look at the payroll and see how this is applied. Obviously, if you need help with that, give us a call. You know, we can have a 5-minute conversation and put your mind at ease. Or we could, if you do have a inkling that you may be underpaying somewhere, just give us a call and we can do a quick spot check for you and go from there. Just to put your mind at ease, basically.
Yeah. Okay.
But it's always worth checking and being found out that you're correct, than not checking and finding out in 5 years' time that you've been underpaying for 5 years, and suddenly that $100 underpayment has turned into like $70,000 that you owe. So, yeah.
Okay, thanks, Shane. So if a client was going to do this payroll check or a full audit, what's the process? What would, you know, if they used us or they used somebody else, what would they give the team that was reviewing the payroll?
When we do payroll audits, but we start off with, we have only basically need 2 bits or 3 bits of information. We need the award or agreement the employee's covered under. We need copies of their pay slips for the audit period that we're going to do, and the timekeeper records for that period. So all we do is we take the timesheets, and whether that's they're on PDF or Excel or whatever, the employer provides that, and we match up what the employee should be paid based on their agreement or award, and we check it off on the payslip to make sure that that is correct. And at the same time, we check their superannuation accrual, superannuation calculations, and their annual leave accruals. So basically, it's just providing the 2 bits of information plus the agreement, and that's all that the employee needs to do.
Great.
Employer,
okay.
Sorry.
Thank you. All right, Ben, let's go back to you. So many businesses have been struggling, and we've seen this quite a bit, with the interpretation around time worked and overtime. Have you got any hints for those listening in about that issue?
Yeah, look, the issue is going to vary from award to award and industrial instrument to industrial instrument. So it really comes down to having a clear understanding of what the overtime provisions are under the relevant instrument. For example, many employers are of the view that people only accrue overtime after 38 hours, but there are a number of awards which will have daily spans. So typically that would be 6 a.m. to 6 p.m. and time worked outside of that would be overtime. Additionally, there might be a limit on the number of hours that can be worked in a day, and typically that would be 8 hours, though by agreement that could be 10. So you need to assess whether there's that agreement there. So there's a range of different ways that overtime can be interpreted, can be incurred under the award. But sometimes that can be an advantage to the employer because the way that it applies overtime can be used to reduce the overall quantum of overtime. So typically overtime would be time and a half the first 2 or 3 hours and then double time thereafter. So if you're dealing with overtime in shorter increments throughout the week rather than applying it at the end of the cycle, then typically the overtime overall cost burden would be less.
Okay, all right, thank you. And what about time and wages records? What are some of the legal obligations around that?
Okay, so the Fair Work regulations set out what time and wages records employers need to keep. Those can be somewhat complex, but breaking them down into a reasonably simple fashion, you need to keep information as to the hours the employees worked, their rate of pay, if they're a casual, the loading that they've received. You also need to, particularly for employees that are working overtime, you need to include that so that the Ombudsman or anybody else looking at the payroll can see what period of overtime has been worked and what pay that's been worked at, or sorry, what payment has been received for that.
Okay, all right. And just one final question back to this challenge that some employers have been having around salaried employees.
Mm-hmm.
So some of the, from discussing with Shane, some of the challenges that the employers have had around this area is they may be paying a salary that's quite high, but they've missed some of the allowances that are required under the award. Can you offset the allowances against that salary?
You can, but it has to be done in a particular way. So if you just pay somebody a salary of 150,000 and the contract doesn't specify what that's paying for, then the court will interpret that to be the base rate of pay for the employee, and it will then consider allowances to be paid on top of that. And now that becomes particularly problematic if the allowances are calculated under the award as a percentage of the base rate as opposed to a fixed dollar figure. But certainly it's possible to construct a contract that sets out that the salary is in full compensation for the hours of work that are performed, penalty rates, allowances, so forth. And certainly if anyone has any concerns about that, then we can certainly look at contracts to make sure that if they're paying a salary that it's in, and they intend it to cover those things, that it does in fact do that.
Okay, thanks, Ben. All right, Jamie, you've been involved with a few clients who've ended up at the Fair Work Ombudsman. And they've ended up having enforceable undertakings with the Fair Work Ombudsman. So what's involved in those enforceable undertakings, and what are some of the key components of them?
Yeah, they're quite detailed, and like you said, we've dealt with a number of them, Belinda, either from people who have, or organisations that have self-reported or just come across in front of the Ombudsman through other means. And they've all been required to enter into that enforceable undertaking, and it involves a couple of things. One is they have to engage an independent assessor at their cost to look at the positions that are across their business, look at the instrument of coverage, whether it's an enterprise agreement, contracts, awards, ascertain what classifications they should be, and then consequently what pay should have been paid against those people in those positions. They also require, the company is also required to enter into or get an independent assessment from a payroll perspective as well. So once we know that classification problem, it's then a matter of a retrospective look at their payroll in order to understand whether there's any underpayment or overpayments. And then they have to report to the Ombudsman on that. The Ombudsman puts in place pretty strict timelines associated with that. And then going down the track over the next couple of years, and we've got a couple of clients that are like this, there's a requirement to do audits, similar processes. Those audits will involve a review of the positions and the classifications, as well as a payroll review to make sure those people have been paid accordingly. So it's a pretty detailed process, and it can linger around for a number of years.
Okay, thanks, Jamie. We're coming up to the last 10 odd minutes of the webinar. So encourage, we've got another 1 or 2 questions to answer, which I'll get to in a minute. But before we get there, just encourage all of you, if you've got any questions, just feed them in, and we'll have a look and see if we can answer them in the remaining time. But before we get there, Ben actually also talked about this issue about annualized salaries, and the reason we keep talking about it is because it is an area so many companies that we've been working, or businesses we've been working with, have been challenged by. So if we employ people on annualized salaries but they're covered by an award, what's your advice? What should companies be looking for?
Mm-hmm. Yeah, so I guess there's two things here, Belinda. There's annualized wages and there's annualized salary, and I guess annualized wages is they often refer to as the bundling up or the rolling up of award entitlements into one annualized round figure, which is much easier to process from a payroll perspective, and a weekly or fortnightly, monthly payroll perspective. And then there's annualized salaries, which is sit under common law contracts of employment. So I guess they're a little bit different, but I'll talk about those annualized wages. As Ben sort of alluded to, it's the rolling up, it's the pulling out of all the different entitlements that sit within the award. So it's your overtime, your weekend rates, your penalty rates, etc., public holidays, and it's rolling that into one annualised wage based on the hours that they think those employees are going to be working. That needs to be communicated to those employees, and as Ben alluded to, there's a lot of obligations on employers around timekeeping that needs to marry up with those. So that needs to be monitored at all times. And ultimately it comes back to the better off overall test almost, in that those annualised wages, people need to be better off overall against that award. Annualised wages under the award, some of the awards now specifically state how you can enter into those. But they're similar to an IFA in that employers and employees are meant to be able to opt out of them if they want to, if they choose to. A bit different to an annualised salary under a common law contract of employment, which is a lot more complicated, but it's sort of like it's binding on the parties and maybe a little bit harder to get out of. Ben, I'm putting you on the spot here, but did you want to add anything from a legal perspective in regards to those annualised salaries?
Yeah, I think that's right, Jamie. The other element that's under the awards is there usually needs to be an accounting back to the employee generally every 12 months, which sets out kind of how much penalty rates they've incurred, how much overtime they've done, and how much better off that they are. So a common law contract doesn't have that obligation. We would still encourage clients to do their own internal reconciliation at regular intervals, I should say, but there's not a requirement to share that with the employee concerned. The other advantage of the common law contract, as you mentioned, is that that's binding for the term of the employment relationship. You don't have a situation where the employee can give you notice and opt out within, say, 6 weeks or so, whatever the particular award provision might be.
Okay, thank you. Shane, and actually, Shane, we've got a question from John, which I'm just going to ask you. He said, looking at some published award rates, the weekly rate calculated to the hourly rate leaves lots of trailing decimals that are unrounded. Could this lead to unintended errors? How would you manage this rounding issue?
I'd ignore it. It's like, it's not, it would work out a few cents per week at the maximum. But as long as you keep the weekly rate of pay and you enter in your payroll system as $500 a week, payroll system calculates it based on a 38-hour week. Depending on your payroll system, it will calculate it correctly. But yeah, the amount of the unintended errors, it would not be an issue. It would be very small numbers, and Fair Work wouldn't, I would assume Fair Work wouldn't be interested in those sort of errors. However, to be on the absolute safe side, you can always just round up to the nearest cent for that. There's no need to have like 4 decimal points or anything. Fair Work actually, they provide a list every year of what the hourly rates are, as well as the weekly rate. And a lot of times you'll find that this 1 cent is actually less than, if you times that by 38, it is just under what the weekly rate is. So in my opinion, they're not overly concerned with that because it might work out a few cents a week.
Okay, thanks, Shane. We're coming to the last few minutes, but there's just one question I wanted to ask you before I get the panelists to wrap up. So we talked about overpayments. Can you give us some examples of some of the overpayments you found when you're looking at payrolls?
The majority comes down to the accrual of annual leave that's been overpaid. We had one client a few years ago, they were adamant that their payroll was correct, and I did a check of their annual leave, and they were actually over accruing their annual leave by 8 hours per employee, and they had a significant number of employees. So when I said to them, "Oh, you're actually over accruing your annual leave," they didn't believe me, and I said, "That's fine. You don't need to worry. You're overpaying." But later on, they came back when they checked my figures, and they had like a $500,000 overpayment that they were over accruing. So they quickly changed that. So it's not always, we're not always the bad guys finding the underpayments. We try and find the overpayments for you as well.
Yeah, okay. All right. So actually, Leanne's just asked a question about those overpayments, and maybe Ben, you can answer this one. Is it correct that if there is an employee overpayment, there is no obligation for the employee to pay it back?
The starting point is that if an employee has been overpaid, then they're not entitled to the money that they've received. I think the question really is, can the employer unilaterally deduct the money without the employee's agreement? And the answer to that is more difficult. Generally, the answer is no. The Fair Work Act says that you can't unilaterally deduct monies from an employee's wages without their agreement, or in other cases. One of those cases might be, for example, an employee leaving and not providing the appropriate notice, and the award might say that the employer can deduct in certain circumstances. That's not to say that there aren't other options available. The employer could consider pursuing the employee at common law, but practically, and depending on the amount involved, often the cost of that will exceed the amount that the employer is likely to recover.
Okay, and just as a final follow-up to that, because we're going to have to wrap it up soon. However, that doesn't stop the employer changing the payroll system to correct overpayments so they don't occur in the future, does it?
Absolutely not. I mean, you need to, I guess, firstly understand whether somebody may be paid more than the award, and that might be a contractual entitlement. So that might change the situation. But then more often than not, it's an administrative error, and the employer is fully entitled to cease continuing that error and pay the employee correctly from that point onwards.
Okay. All right. Well, we have just finished the webinar. We've actually hit our 1 hour. It's gone really quickly. Thank you for all of your questions. I didn't get the opportunity to ask the panelists for their final wrap up, but I'll just wrap up on behalf of the group. A lot of questions in this area, a lot of confusion, particularly around some of the things around salaries and things like that. But look, I hope that we've made it a little bit clearer for you that it's not something you need to be worried about. It's something worthwhile just checking. You know, some companies now are just checking every 12 months, just doing a quick check to make sure everything's okay. And at the end of the day, that would be what we would like to finish up on, that, you know, just check, you know, and like Shane said, you're better off identifying a problem before it becomes bigger and bigger and bigger, and trying to deal with it. But just if you do identify any problems, just make sure you've got a clear plan for how you're going to deal with it. You know, really consider the situation, look at what the problem is, and then work out your plan for how you're going to manage it going forward. So thank you to everybody. Thank you, Jamie, Ben and Shane, for your expert advice. If anybody has any questions afterwards, please feel free to reach out to Mappian or any of the panelists at any time. So thank you, and have a great rest of your day. Bye, everyone. Thank you.
Thanks, Belinda. Bye.